positive data point in an inflation fight today has made the markets a little bit more optimistic about what is to come. We'll be discussing that, the latest around job revisions, some GameStop news, and much more today on Money Never Sleeps. Thanks for joining us today, everybody. As we get going, do us a favor, hit that like button, subscribe to our channel. Remember, anything Kevin or I say is financial advice, so please do your own research for making any financial decisions. Kev, we got some interesting news this week. A revision on jobs over the last year shows 911,000 less jobs reported being added than what should have been. And we got some surprise to the downside on producer price index inflation today. So a lot of mixed signals here, but it's kind of all pointing, not really, it's all pointing in the direction that like the Fed should cut, and the markets have been moving in that way. We now see up to 10% chance of a 50 basis point cut this time next week. Confirmation that, very good chance we get at least 75 points by the end of the year, if not 100. So you'd think that the markets would be rallying pretty hard on that, but honestly, it's given back a lot of the early gains. We look and see the NASDAQ has actually turned red on the day. The Dow is down. S&P giving back some of its early gains. Meanwhile, crypto saw Bitcoin go over 114K. That's back down into the mid 113s. ETH went as high as 4450. That's back down to the 4300. So early optimism, but now the markets are kind of reverting back, and we're seeing the initial sell-off that took place in the bond market has started to turn a little bit as well. Meanwhile, gold is up, silver is up, oil is up. So it's really, really tough to figure out what exactly is happening and how the markets will respond to any piece of news right now.
Yeah, absolutely. I mean, I even texted you in house yesterday my frustrations with how this market is developing. It's really hard to invest or know where to put your money in the equity market, and I mean equity specifically, because there doesn't seem to be necessarily a ton of value to the upside, and it feels like there's a lot of risk to the downside given all the bad data points. But again, the market is not the economy, right? And that's why we're in this really weird limbo stage of, well, shit looks like it's getting worse, but the markets continue to push higher. That being said, also tons of insider sales in the past 2 weeks. The one thing I sent with you was like of the past 400 sales in the past 400 transactions of insiders, the largest ones, 398 of those were insider sales. That's problematic. But then you see the stock market right now where everything kind of is. It's like, what's actually going on here? There's signs, I think, in the global market and global liquidity that there's issues, but we continue to push up. And that's the problem. And we've talked about this in the past, and I've obviously learned it, is that the markets can stay irrational longer than you can stay solvent. And that's kind of what's happening here. It sucks to say, but you can't really tell what's going to happen given the data. Bad data, market stays sideways. It won't pull back more than 3%, but it'll push up slowly, less than 0.5% each day.
It's boring, and it's we're doing our best here not to sound too repetitive, but at the same time, we can't. I only go, I talk about on here what I'm doing personally, and me personally, I'm not doing a whole lot right now in the markets. I may look at the end of the year to try to trim some positions for tax reasons, but right now I cannot justify putting more money into the markets when the valuations are this crazy high right now.
Yeah.
Everything is priced in, and we have so much uncertainty. And I see the housing market start to get worse. I see consumer credit getting really, really delinquencies on housing and credit cards are at multi-decade highs. I can't get bullish right now. And maybe that's going to be, me missing out on potential profits, but I just can't do it. The logical part of my brain will not go to this place. Maybe I'm going to have to learn something from this in the future, but if I'm still positioned in my long-term, holdings to where I'm set up to gain if it continues to move to the upside. So that's great. But I'm also in positions with cash where, hey, if we do see the drop that I think we will, I can benefit from that also. So, I might continue to slowly like DCA out from some of my positions and look for opportunities to re-enter at better prices. I'm not, selling everything by any means, but I just think that there's not enough upside potential to outweigh the downside risk, in my opinion.
Absolutely. And we're running out of catalysts. We really are, right? What's left for this month? The Fed rate cut, right? That or supposed rate decision. I should say rate decision. We don't know what's going to happen that day. We've been surprised by no action. We've been surprised by action. But it's going to be interesting to see what happens. But that is going into quarterly effects. I mean, you really needed something to happen before that.
You sound like you're underwater right now.
Do I really? Damn it. Damn it.
Now you sound better. When you leaned back, it was like you were talking in a fishbowl.
Okay, sorry about that, guys. Yeah, so this is a really shitty point because we definitely need some type of catalyst in the market to kind of pull us back, and we're not getting that. It should have been the BLS data. Markets didn't care. It's priced in, and the longer we go without getting this pullback, we're going into an election year. There is a really high chance that we just might not get a pullback at all. That's the scary part, right? Because again, we could just turn on the money printers, keep going. I know it's hard to see that now with the fact that we haven't cut rates yet. Maybe there's a catalyst in the beginning of next year that allows markets to push higher, maybe a small pullback and push higher. If you want a true pullback that's healthy for markets, you would kind of need it around OPEX. Before would be better, but it could happen after, very similar to how it happened in April. So I'm not holding my breath here. I think I'm happy with positions that I have. Again, based off of global liquidity, there's issues with that, but we just can't decide what the markets do, right? We're too small of players in this to actually, wish things into existence or will them by moving money. With that being said, I do want to show one thing that's going on in Asia right now because this is just absolutely just mind-numbing what's happening there. Pulling up the Nikkei, it's just pushing higher and higher. It's absolutely insane. And you can see that we're pretty overbought on the daily stochastic RSI. If we look over to the weekly, we're rolling over. So I would hope there'd be some type of pullback in there. If we go to the monthly, you're almost overbought completely on the monthly. Japan has just been printing money like crazy. I believe last night was the 42nd intervention within a month since July 31st or so a little bit over a month. But 42 times the BOJ has intervened and pretty much put cash on demand for the markets to provide liquidity for a lot of these bond markets. Therefore, people didn't have to sell off the equities themselves and throw cash into them to bring the yields down. Again, we've talked about how important these yields are in Japan, the Japan 30-year especially, because the higher this goes, the greater the unrealized losses there are for these Japanese banks. There's still one that's using the Federal Reserve emergency repo as well. We don't know who it is necessarily, but we've been seeing like bids of $100 billion or so that has been granted, or not $100 billion, I'm stupid, about $1 billion or so that's been granted, 100 million sometimes, but it's usually around the $1 billion that they borrow from the US and then it's paid back the next market day. But that is usually a sign of stress in the system. When I look at this yield here, obviously stochastic RSI is oversold. It could continue to rally up higher. This chart tells me that it's more likely that it will, but we're in this place where something has to give. If we continue to see interventions, they could probably coast on this. This is like coasting on fumes until something does happen, but they're really pushing it, and it's really pushing global liquidity to a place where, okay, the yen might be getting stronger. We do know that the Prime Minister of Japan is stepping down. I believe it's October-ish. And the reason that is obviously they lost in their elections and they're going to wait to have a PM vote. And I believe that is taking place in early October. That being said, you're also seeing a lot of issues in Europe. France lost the election. A lot of things are going to be switching over, and that obviously means policy changes as well. And if there's any perfect time for that to kind of happen, for some type of pullback or the yields to go higher, It's probably going to be during those administration changes. That would be my personal opinion. So maybe this pushes higher in October, but for right now, we're kind of just sideways trading in this, and the Nikkei is just grinding up higher and higher, and it's probably gonna have to fill a lot of gaps to the downside because there are tons of it. But you can't really necessarily worry about the Nikkei uh, in panic mode until it loses this blue line here. So that's somewhere around 42,000. Right now it's at 43,837. You could get that in one day. You really could. It could be like August 5th, 2024 all over again. But there are no signs of it given how much it's been churning up recently. Um, and you can even kind of see that in the VIX as well, just what's going on in the US. The VIX is staying sideways flat. It's anticipating a move. We're still waiting because it has broken out of this channel, and we do think that there is going to be of all events that pushes the VIX a lot higher. Doesn't have to put it to all-time highs, but it can definitely push it into like the 30s. And I think that's a fair assessment. We got a little bit of a warning call yesterday on the VIX futures. You can see the VIX shot up to 18.35 after previous day close of 16.29. So a pretty good move to the upside, about 12.5% or so. If we continue to see it climbing from here, then we should be a little bit more concerned with volatility. Might be people betting on the fact that the VIX might actually be getting pretty volatile, and you might see a pullback in the market. So this is one that we used in March, April, to tell if we were going to get a vol event. The VIX obviously shot up pretty high, and then our UVIX position shot to 100 or so from, I believe it was like in the 20s. But that's what we're going to be looking at moving forward. It's just I can't really say anything is going to happen for sure until we get confirmation from some of these charts. We're not getting that. We're just trading sideways, which kind of sucks.
Kind of sucks indeed. Let's go ahead and look at equities right now here in the States.
Sure.
We're seeing a lot of pullback and red across the board in tech right now. Apple down almost 3.5%. Same for Amazon. Tesla is up a little bit. Nvidia having a good day. Meta is down. Google is down a touch. So there seems to be we had the Oracle news. I think their big contract that they received, and they are having a hell of a day today. They're absolutely ripping, but other tech is lagging a bit. So what are you seeing in some of these charts? We had the Apple news yesterday of like the new iPhone and the new, like I'm guessing my phone is going to start to crap out any minute now with the new one coming out. Same with my AirPods. So I guess I'll have to get the new AirPod 3. So those do look pretty cool, to be honest with you. But, what are you seeing in the charts as so much of this stuff? I mean, like just so overbought. Like that Meta chart right there, on the daily, very overbought. Apple, if you look at their, there's moving to oversold because it's had a few rough days here. Same can be said for Amazon. So what are you actually? Amazon's still toward the overbought side. Even we'll see what that chart looks like after this day. But
yeah,
what are you looking at in some of these charts for equities?
Yeah, this is absolutely insane. We're seeing a bit of a pullback in Apple. How many times are we going to get surprised by an iPhone coming out? You know what I mean? Like this one's skinnier. This is like the difference between the original Nintendo DS and the Nintendo DS Lite. We're not really moving the mark too much with technology, and you can kind of see it, right? Honestly, I kind of wish that the Apple Vision Pro came out now, because this chart would probably be either a lot higher or a lot lower. But something like that seems like that would have been a top of a market move for Apple. Obviously, we're coming down to level of support right here around 224. If you lose that, you're coming down to this blue top here at 216. Maybe fill the gap there. You got a lot of gaps to the downside. You got some in here, and probably got some more on this side. Yeah, we got a lot from pre-2025, 2024 and earlier that could be filled, but we're taking this one day at a time. I would say though that this is a pretty bad move to the downside, so I think that maybe we're getting a bit of a correction now. Maybe this is wave 1, wave 2 bounce, and then wave 3 we kind of find what gaps we're filling on this side. And if we look at Amazon too, obviously tons of gaps. The market's been gap up only, but very little pullback along the way, and that's why it's very shitty to see price action where it currently is. Google, it's down 0.26%. doesn't really get us out of bed in the morning if it's down that much or if it's up that much from one day to the next. It's very sideways. But there are some gaps here from obviously the lawsuit where Google Chrome doesn't have to be sold by Google. Look at NVIDIA, you're kind of rolling over on these. You're losing these blue support lines too. That's something I should have said earlier. Apple, I think. No, not Apple. Is it Amazon? No, which one was it? Meta. It was Meta. Yeah, Meta's finding resistance on that right now. So maybe there is a bit of a correction coming soon, maybe to fill some of these gaps. But, we're getting really close to OPEX, and you kind of need a move between, honestly, now and then the Fed rate decision, and then see where things kind of close on next Friday, because that's going to be an important OPEX level. And then if it's down low enough, then maybe we have a little bit more to go after OPEX. But this feels very early in any type of correction, in my opinion. I think for what this market's been through the past 4 years or so, I mean, at least since 2022, there is a lot of traction that was gained, not necessarily a lot of pullbacks since then. We've had a lot of liquidity kind of prop us up for the past few years. So seeing a meaningful correction, it's harder for me to believe it right now just because we haven't got one in a while, but it is possible. It is very possible. I do want to talk about GameStop real quick, just because I almost forgot about them. Just talk about their earnings, the warrants, that's what they're issuing and everything. So this is from Reese Politics. If you are a GME follower, you know who he is. But EPS 25 cents versus an estimated 19, and the revenue is 972 million versus the estimate of 823. So a double beat on earnings. Their margins are coming down a little bit. Obviously we would expect that because consumer is getting weaker. We're seeing the data, the revised data, so to speak, from the BLS, from other consumer sentiment reports. That's a natural given, but it still shows you that they are a profitable company. And with that, I think everyone was kind of afraid that they were going to do some type of dilution through convertible bonds or some other means that was going to hurt shareholders. But if you are holding GameStop, you are probably very happy, because for every 10 shares that you're holding, they're going to give you a warrant, not for arrest, but a warrant is pretty much a call option for a stock if it crosses a certain strike price. So the strike price that they've settled on is $32. So say within the next year or so, which is how long these are good for, the price is trading at $70 a share. You could exercise that warrant for $32. You only pay $32 for that price at any point, and then you get the difference of the value from where the current price is trading and what you pay. So 32 to 70 or something like that, you're getting like $48 or something like that per share. I actually got a decent amount of them, so I'm very happy. I'm very excited. It's going to be interesting how these are playing through, because obviously Robinhood doesn't allow warrants, and a lot of investors that are GameStop holders actually still hold on Robinhood, and you have to call them to exercise it for you. So that's going to be a whole mess. My advice, if I had GameStop shares, I would either DRS them, which is directly registering your security, or I would move it to a broker that most likely is going to be fine issuing you your warrants, which are tradable on the New York Stock Exchange when they get released on October 7th, but you have to hold the GameStop shares in your account until October 3rd. So I have all my stuff on Schwab. They do issue warrants, so I'm very happy with that. I don't have to do anything. If you have it on other brokers, I would check to see what they're doing with that. But pretty much what that means is that for every 10 shares, you're getting issued that call. It's problematic for shorts, because now they have to provide an extra share for every 10 options that they have. So if they have naked shorts, they have to provide one share for every 10 that they're shorting. It's kind of an interesting, tricky play. I think it's going to be very exciting. I think it's going to be good for GameStop. It's adding another $1.9 billion in revenue, supposedly, and that's going directly to the company. And if that's the case, then GameStop would have $11 billion on hand. And if the market is going to pull back, so a company that is 9-to-1 cash to operating expense, that means that they are obviously one of the best companies to withstand some type of recession, because they just have so much cash on hand that they can deploy at any point. So we saw that it shot up earlier today, went to about 25.42, at 26 earlier. It's probably going to come back down and fill this earnings gap. Then I think we might have some continuation into October 3rd, October 7th time period as people try and load up on the warrants. Just, this is kind of what we're going to be looking at for the next few weeks. Obviously, the Bollinger Bands, it broke through today. I think it's going to come back into it and then push to the upside. But a lot of the meme stocks are kind of showing some signs of life. Like FFAI has been eating shit for the past few weeks. Comes down, bounces off here, breaks out. Obviously, you're still trading within a range. We'll see what happens there, but it's very possible we can just kind of trade sideways here before we start to push up from here. But that's up 4.5% today. You can see Quantum Biopharma up on the day today, 31%. It was up a lot higher earlier. So a lot of things are breaking out. The GameStop news is very bullish because it shows you that they probably do expect lower amounts of liquidity in the financial system, which means it's harder for shorts to cover. So anything with high short interest or high required short margin is in a really bad spot. So I think a lot of people are loading up on things that are potentially going to rise with GameStop if we do get into a squeeze scenario. So interesting stuff on that front. What else do we have? Should we talk about Robinhood real quick? And then we could talk about crypto and call it a day.
Yeah, let's go for it.
All right. Robinhood allowing you to short stocks now. Fucking dangerous. I don't know about you, but I would not use this at all. Just my personal opinion. We've seen what has happened with Robinhood in the past, turning off the buy button. If you get into a point where, I'm going to short the market and it's a lot of retailers that are shorting one specific stock, you guys are going to get wrecked. I'm not even saying our viewers, but retail in general will get wrecked on this. They can see everything on their side, where your liquidation levels are, where max pain is. You can have infinite losses doing this. We haven't seen the full layout of the features yet, but this coming out right now is just problematic. It really is. This is like extracting the last bit of liquidity from retail. It's like pulling out your gold teeth and your silver fillings. It's essentially what they're doing to retail, trying to get this thing up and running. And again, if the market's coming down, retail's going to think, well, I should probably try and short things to make money on the downside. You have to understand where we are currently. We're in a very dangerous place in this market, and I think it'll be like this for the rest of our lives. I think that we live, as long as the debt system and fraud kind of are encouraged, you're going to see things push up higher and higher. I mean, look at Robinhood, their IPO, right? Ate shit on the IPO. It was bad for years, trading at like $10 or so. Now it's at 117. Why is that? It's because we've had 3 years of them just doing trades nonstop for retail, people making money. And they were just collecting those fees. If the market pulls back, sure, the stock might go down. Doesn't mean that Robinhood isn't making money as the market is selling off or if it's going up. They're the casino. You have to understand that they're always going to be making money regardless off of whatever trades that people are making. Now, if there's no volume and people are taking their assets off the exchange, different story. But if they have instruments now that are no different than Schwab and some of these other ones, you got kind of have a company that's just going to be making money, and the price of the stock doesn't necessarily matter. If you try shorting Robinhood too on Robinhood, good luck. Honestly, it seems like just like a dangerous trade. So if you're going to be shorting, if you want to short, obviously understand that losses can be infinite. And this is a very complicated time with how much money has been floating in the system and how it could just dry up out of nowhere. And that could honestly lead to short squeezes in either direction for a various amount of equities. The problem is, though, you're just not going to have the same tools as some of these other larger institutions that are shorting. They're going to have more capital than you. They're going to have obviously better features, and there are better brokerages, in my opinion, to be doing some of this stuff with. I would not be doing it with Robinhood, just my personal opinion.
All right, let's wrap it up by looking at crypto. Like I said, we saw a big move for Bitcoin earlier today back into the mid 114s. It's now come back down. It looks like it may be moving back toward 113,000. And alts are starting to give back some of their gains as well. You know, we've had some big movers today. AVAX near the top of that list, up 10% so far, and gone on a nice little run here over the last 5 days, moving from $24 to $28.53. So what are you seeing in crypto before we call this thing a day?
Yeah, you know, we talked about this being a bit of a following parallel channel, which is necessarily a bull flag, and we've broken out of that. If it's a true bull flag, we want to see it go higher than 117. Is that possible? Maybe. Obviously, things can stay overbought for a period of time. We are in the overbought territory for Bitcoin right now. But if we look at the MACD, obviously we're turning positive. The question is, how positive can we get the volume, and how quickly how long can it sustain this positive volume on the MACD. That's going to be really key to telling if we have a greater move ahead of us, or if it's just going to be kind of like a bounce, and we're going to continue to the downside or trading flat sideways. A lot of continuation patterns that we've seen recently. We can see that the Bollinger Bands are fairly not necessarily tight on that front. And we've talked about this in the past, but if we look at the weekly and stuff like that for Bitcoin, it is oversold. However, if we look at the monthly, it looks like a lot of these things are kind of rolling over, especially with you getting a monthly candle lower than the previous month. That's problematic. I think almost got a bearish engulfing the previous month, but we're just taking this day by day, and there isn't really confirmation that anything bad is happening with Bitcoin right away, which kind of sucks to say because we want to see confirmation one way or the other so we can kind of position ourselves for these things. But right now it just seems like continuation pattern. And, if I had to guess, this has been some of the greatest distribution that we've ever seen above this level of $98,000 for Bitcoin. And honestly, we haven't touched 98 since middle of June. So could we find some support there? Yeah, it's possible. Could we push up a little bit higher? Yep, it's very possible. If we look at the Bitcoin dominance chart, even that's kind of slowed. We were expecting to go to 57. If we get to 57% dominance, obviously I think ETH and alts would have a better chance of moving to the upside. This kind of stalling that we're seeing here in Bitcoin dominance and the volumes and just flat sideways trading or within these like slow descents complicate a lot of these things, and they really do take time away from tradable action. That's a problem as well. You can see ETH right here. I didn't even set up this chart, but within mind of what's going on today, but we can definitely see that this is just one giant megaphone pattern, right? And we're getting pretty close to being exhausted up here. We've hit this once, twice, 3 times, 4 times. And then we hit this once, twice, 3 times, 4 times, 5 times or so. It might be 5 and 5 on top after this double top here. But you want to break above this yellow line, so we can expect this megaphone pattern to be a break to the upside. You have some daily stochastic RSI for some room to move to the upside, so maybe we get to that 4,600 level. We can push up to 4,867. We'd have a make or break moment there to see if we can get to all-time highs again. But if you look at the MACD, it looks like it's negative, but it's turning around. We're losing the negative volumes. Might turn green in the next few days or so, given that anything bad hasn't happened. And, once ETH kind of starts taking off, you have a better chance for alts to be taken off as well. Farcoin, should we even talk about this thing? Considering what it's done, it's just sadness. Solana, Jweb's call was actually spot on. Hit 225. So round of applause for you there. That was perfect call. You said 225 was where it was going. It hit it right on the dot.
Let's see where it goes from here.
Yeah. If you want some of the Solana coins to go up higher, you need this to go a lot higher. But I'm satisfied with this being an ABC corrective pattern. I really am. I think this is a good chart. What I would anticipate from this here is 5 waves to the downside, which we've got 5 waves here. And that brought us all the way down to 103 from the high of 294. And, 5 waves down, that'd be ABC corrective pattern. It'd also be part of the larger ABC. So it'd be 5 waves, 3 waves, 5 waves, finishing off the C pattern. And if I had to guess where this kind of takes us, this would be somewhere north of $8.05. So that's where we would be putting our bottom. I would anticipate this 22.29 level to be a good level of support for it in the greater move to the downside. But again, we're looking out a lot into the future for that. Last thing I do want to show is the reverse repo, because we're going to continue to keep an eye on this. This thing is just scraping the bottom of the barrel. It's up, 28% today, but it's 6.49 billion dollars in the reverse repo. For the past few weeks, it's been sub 106 billion, and the past few days more so it was below 28 billion. So we're getting to the point where a lot of counterparties are not really showing up to use it, and that's problematic because that means that there isn't capital going into some of these treasuries. And if that's the case, we should be seeing the yields kind of reacting oddly to that. The key one is the 3-month. It is rolling off the cliff. If it continues and we start seeing it go into the mid 3s, we're in a really, really big problem, because then we're probably going to see a lot of liquidity and currency fluctuations, I think globally. So that's kind of everything that we've wanted to talk about today. Again, we just wait and see now. It's all we can really do.
All right. That is going to wrap it up for today. Hope everyone enjoyed the show. If you have not yet, like, subscribe, drop a comment. We will talk to you all soon. Have a great rest of your day. Take care.
Stay safe, everyone. Take care.